Steve, I have called you here today to learn about expenditure and income types in accounting. Your boss feels that you cannot differentiate between the four types. Firstly, the main purpose of accounting is to help monitor and record all activities that impact the organization, in order to measure their overall performance. In accounting, there are four different types of income and expenditure types. These are revenue income, revenue expenditure, capital income, and capital expenditure. Is all of this making sense so far?
Yes.
Good. We will start with the income types. These are capital income and capital expenditure. Capital income is where money is brought into the business by investments of the owners or other investors such as shareholders. This is to set up the business or buy additional equipment that will be used for a long period of time. Capital income will also occur if the business sells an asset or loans an item. Capital income will vary if they are a sole trader because they will not sell shares. The next type of income is revenue income. This is the money coming into the business by selling goods and services. Revenue income can also occur when the business receives commission or receives rent for charging others to use their property. The two income types are different because they have different sources of income. Is this making sense so far?
Yes, this is all making sense.
Okay, let's move on to expenditure types. These are revenue expenditure and capital expenditure. Capital expenditure is the money that is used to buy fixed assets. Fixed assets are items that are purchased for long-term use in the business. This could be buildings, machinery, vehicles, fittings, and furnishings. This type of expenditure is purely for items that are of use to the business for a long period of time. Any other expenditure of the business is revenue expenditure. Revenue expenditure is the spending of money for items that the business needs on a day-to-day basis. These could be staff wages, purchase of stock, selling and distribution costs, or premises costs. The difference between revenue and capital expenditure is important due to their differing treatment in the financial statements. Any capital expenditure will be recorded on a balance sheet and any revenue expenditure will be recorded on a profit and loss account. Has this talk given you the right information?